some objectives, some expectations that are. We're not trying to tell you what to trade. I'm not going to tell you technical analysis will give you a watch list of stocks that you should trade. Fundamental analysis is a great way to do that. How many of you use fundamental analysis in your decision-making process? Cool.
That's a good thing.
Yeah, as a matter of fact, we have a whole division at Charles Schwab called the Schwab Center for Financial Research that does nothing but fundamental to help you to understand what are the qualities of the companies behind the stocks that you see on the chart. Is the price of the stock always reflective of the fundamentals of the company? Now, I'm guessing that there are some of you in this room that probably make buying decisions or entry decisions and exit decisions based on fundamentals. I want to get a good company that's got great fundamentals, and I want to get a bargain hunting. And the idea is that at some point the market is going to recognize that that company is undervalued, and they're going to pop the price of the stock up. Now, the fact that most of you are brand new in this room and have not been to one of these workshops before allows me one thing, and that is to tell my same jokes again, because you will laugh. If you haven't heard them before, if you have heard them before, give me the courtesy of laughing too. Okay. There's a joke that I like to use in this particular discussion, and it is this. A fundamental analyst and a technical analyst walk into a bar. Not a bar on the chart, but an actual bar. And they're having an argument about technicals versus fundamentals. They're arguing valuations versus trend and all of those things. And in fact, this argument gets a little bit heated, and they start shoving each other. You know how technical analysts get a little bit hot, and fundamental analysts are a little bit, like that. So they're shoving each other back and forth, and a server walks behind them with a cutting board, and on that cutting board, there's a big knife. I don't know why they're walking through a bar with a big knife, but they are. And the pushing and shoving gets heated enough that they bump the server and knock the knife off the cutting board. Well, the technical analyst sees that this is happening and jumps back. Says, oh, that knife falls off the cutting board, I'm out of here. The fundamental analyst stands there and watches the knife as it falls and hits them in the foot and stabs their foot to the floor. The technical analyst says, why? Why did you do that? And the fundamental analyst says, I thought the knife was going to turn around and come back up. How many of you, when you use fundamental analysis, if you look at the trend of the stock, say, oh, well, the price of the stock is going down, but it's got good fundamentals, so I'm going to buy it now, because at some point it's going to turn around and go back higher. Anybody ever done that? Yeah. A lot of traders do that, or a lot of investors would do that, thinking, cool, at some point the market's going to recognize that there's some value there, and they're going to bring the price of that stock back up. What if they don't? What if the price of the stock still continues to go down? What do you do then? Fundamental analysts, buy more! If you liked it at 100, you're really going to like it at 50. And if you liked it at 50, you're really going to buy more and like it a lot more at 25. And then what if it never goes back up? Yeah. So here's what I want to start thinking about. This is the analogy that I use in this concept, and we're going to talk about it in the context of these trends as we look at some examples. Imagine, and we're here in Central Florida, north of us. I'm going to pick a destination north of us that's relatively desirable to go to. Charleston, South Carolina. Fair enough. Charleston, that's where Ray's from, by way of Savannah, Georgia. It's South Carolina. So if you want to get on a bus to go to Charleston, that bus is going north, yes? Okay. If that bus turns around, instead of going north, and now starts heading all the way south and eventually maybe getting to Key West, that's going in the direction you don't want to go. So, my question is this: when you're buying a stock, how many of you get on the bus thinking you're going to Charleston, and the bus turns around and it starts heading to Key West, and you don't get off the bus? You keep riding that bus south, thinking, it's going to turn around. Yeah. The market's going to recognize that at some point, this bus should be going north to Charleston because that's where I want it to go. And then it doesn't. And then you end up in Key West in a dive bar with a bad tattoo. I've been there. I know you know at night. Not recently, anyway. So here's the thought process. If you get on a bus going north, if you get in a trend heading up, and that trend changes, get off the bus until that bus starts heading north again. But remember I said that we're loss averse when the trade is going against us? We have a hesitancy for getting out of the trade. We don't want to make that decision to take a small loss, and we then ride that bus all the way south into a much bigger loss. So that's going to be part of our decision-making process today as we look at these trades and these ideas. Now, can this trend on the SPX continue to go higher? Yep. Yes. Could we have looked at this trade, could we have looked at this trend in July and said, it can't go any higher? Could we have looked at it in June and said, oh, it's at all-time highs. It can't go any higher because it's overvalued. And then it did. Could we have done that in August? Could we have done that in September? And said, it can't go any higher because it's overvalued. We do it now and say, oh, this market can't, it just can't keep going up because it's overvalued. It's got to turn around. It's got to come down. How many of you listen to some kind of financial news or social media and you hear the stories? Legendary investment advisor says the market's due for a crash. You hear all of those stories, right? You know why they use headlines like that? So that you will go click, 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 click on those stories. Those types of stories are designed to bring you in because it's blood in the streets. And yet the trend continues to move higher. So what I want you to do is take yourself out of that story, take yourself out of that narrative, take yourself out of that news that makes money because of bad news stories, because then you're more willing to click on it, and look simply at the trend and make objective decisions. So you can make an objective decision if you were in a position that mirrors the S&P 500. Maybe it's an ETF or an index option or an index fund or a stock that tracks like the S&P 500 and say, if the trend changes, then exit, else wait and ride that trend. It's as if you're telling the bus driver, if you suddenly lose your mind and you start going to Key West, and I want to go to Charleston, and even if your bus says Charleston on it, let me off the bus. Make that decision ahead of time. So we'll talk about that as we get into this discussion. We can still today, as the market opens, we've got a little bit of an upward movement here. In fact, it's up about 0.3% this morning, but it's so overvalued, Ray. It can't go higher.
No, it couldn't go higher there either.
Right.
Yeah.
And then it did.
And then it couldn't go higher there and went. Couldn't go higher there and went. Couldn't go higher there and went.
I'm going to make an argument here that some of you might disagree with, and that's fair enough. I get it. Markets always go up. Wow, that stunned you into silence. The market wants to go higher. Now, depending on the time frame, that's true, isn't it? In the shorter or intermediate time frames, markets don't always go up. But over time, markets, the SPX, the Dow, the NASDAQ, the Russell 2000, whatever definition of the market that you might look at, those are designed to go higher. Why? Businesses are in business to make money. They're in business to grow their bottom line, to grow their sales and their earnings and their cash flow. And CEOs are in business to return value to shareholders who buy their stocks in the form of price appreciation. Now, barring certain nefarious exceptions, the market goes higher. It has an inherent bullish bias, and it has had that for the last 100 years or so. If we were to take a look at the last 100 years of movement in the price of this index, or the price of the Dow Jones, or the NASDAQ, we can see that the market goes higher. It has an inherent bullish bias. It wants to go higher. That's the state of things. I don't know why we're not getting the Dow Jones. Let's go back to the SPX survey real quick, and then let's take a look at that matched time frame. Reconnected. Okay, so this is, let's go to Matt, and just zoom back out.
Yeah, it's on back there.
There we go. Okay, cool. This is the last 100 years of the S&P 500. What's the trend direction?
Up.
What's it been doing for the last 100 years? Has it had short-term, intermediate-term, and long-term downtrends? Yeah. But overall, it's been going higher, hasn't it? Stocks want to go up. That's the base scenario. Bullish bias inherently for the market. So how do we take advantage of that? If price goes higher, get into the trade. If price goes lower, get out of the trade. It's as simple as that when it comes to technical analysis. So let's dig a little bit deeper here, Ray. Let's take a look at a couple of examples. Let's go back down to our 1-year, 1-day chart. Let's take a look at GE. How many of you are familiar with this particular stock? This is General Electric. Now, any of the individual symbols that we look at are simply, as Scott said, for illustrative and educational purposes only. We're not making recommendations. We're going to take a look at GE here really quickly. Over the course of the last year, what's the trend direction of GE? Up. What's it doing in the short to intermediate time frame over here on the right-hand side? Kind of going sideways, isn't it? So I'm going to ask the question, is just as we look at this, before we start to put some definitions, would this be a good time to enter this trade? Right on. Some of you said no. It's going sideways, right? So somebody said, wait till it hits support, pulls back to a support level, and then we might enter on that up from support. We'll talk about support in a minute. So this is again our next if this then that statement. If price keeps going higher, then enter the trade, else wait. Right? That's kind of that trend decision-making process. Because at the moment, do we know what it's going to do tomorrow? Do we know where it's going to end up today? We don't. We don't know if it's going to continue to go higher. Technical analysis, trend analysis isn't going to. However, there is an element to this that suggests that trends tend to continue in the direction that they're going until they don't. Sometimes that's a little bit less than helpful, but if this sideways trend continues for a while, we wait until that trend changes, that sideways trend changes. If price moves higher, then enter the trade, else wait. Or if price bounces off of the support level, is another way to frame that, then enter the trade, else wait. What's our downward trend here, or downward example? Let's use SSTZ. Take a look at a downtrend here. This is Constellation Brands. What's the trend direction here, long term on this stock? Down. What's the intermediate time frame trend direction? I would argue probably down as well. What's the short-term trend direction here on this stock? Up. Bottom right-hand side there, or bottom right-hand corner, it's starting to make a short-term uptrend. So could we potentially, if we were looking at adding a position on this stock, take advantage of that short-term uptrend? As long as you recognize that that's a short-term uptrend, it doesn't necessarily yet translate into an intermediate or a long-term trend. We'll talk about support and resistance here in a few minutes in terms of making that decision. How many of you are looking at this and going, cool, I'm going to let that get a little bit lower before I buy it. The problem is, we try as human beings, and it's kind of in our nature. We try as human beings to get things at the cheapest price that we can. That's the reason why Amazon has Prime Days, Walmart follows along with it, Best Buy follows along with it. We're waiting for the best price to get in. And when I'm shopping on those sites, I'll spend 2 or 3 days looking for something to try to get the absolute best price. But when we're talking about entering a stock trade, we're very, very rarely, unless we get lucky, going to get in at the lowest tick of that price. And we're very, very rarely, unless we get lucky, going to get out of the trade at the highest tick. That doesn't mean we're trading it incorrectly. What it means is we might be losing opportunities to take advantage of kind of the fat middle section of that trend by waiting for perfection, waiting for the absolute low. What does that mean? The opportunity to say to somebody, I bought Constellation at its low, or I bought Amazon at its low. What if it keeps going all the way south to Key West, and it never turns back around, and you got in as it's heading south? So, the way we're going to look at this, we're going to look at getting into trades, we're going to look at getting into stocks that are already moving in the direction that we want them to go, getting on buses that are already going north. Let's look at a sideways trending stock here, Ray, and then we'll kind of talk through how we might display this information as well. This is Gap. What's the trend direction on Gap here? Kind of sideways, isn't it? Yes. Over the course of this 1-year time frame, from left-hand side to right-hand side of the stock, the chart, it's almost exactly the same. But throughout the course of that time frame, it made roughly similar highs and lows. There was a period of time in that April pullback, and then in that rally up to that May high, where it had a pretty strong uptrend, didn't it? And then that trend changed. In fact, that trend changed on something that is kind of interesting. An earnings announcement. How many of you watch or read, I asked this question about social media, or information about stocks that you pay attention to? Okay. How many of you subscribe to a newsletter or some type of service that says, these are the companies that are going to be moving in the future? Right? Or you subscribe to a news service that says, we've got the fastest information available. You know, we live in a time where those news services, the social media services that we use, purport to be able to tell us something that we can then take action on. That would be really nice, wouldn't it? To be able to have a news service that tells us something that happens before it happens, maybe more importantly, before everybody else that's out there trading knows about it. Problem is, if you know about it, and the news service knew about it, guess who else knew about it already? The market. And they've already digested and acted upon that information. So the idea of trading on news, trading on information that maybe somebody else doesn't know, is something that maybe is a lower probability scenario. Or illegal. Now, okay, I will say this, you're right. If we're any members of Congress here, that might be the nefarious exception to that discussion, right? But it says we're not members of Congress, we're probably not privy to that information prior, so we have to make decisions on what's going on, what we're actually seeing in the market, and the market is going to digest that news information very, very quickly. So, and I will say this, even working with and having a show on and presenting on the Schwab Network, where we talk about actionable information, we don't know things ahead of everybody else. We just report on it. and we see what's happening with the price of stock. So we're not going to try to trade on news. So Ray, one of the challenges that people run into is identifying trend. Now, you guys were pretty good. You got that uptrend, downtrend, and sideways trend. I gave you very clear examples here of this chart, on these charts. But what if we took something like, let's take something like Tesla. Let's put Tesla up there, Ray. Now, I've got a few lines drawn on here. What's the trend of Tesla?
Sideways.
That becomes a little more challenging, doesn't it? Kind of sideways. I heard all of the above. I heard uptrends. I heard downtrends. How many of you have challenges or face challenges identifying trends on the stocks that you look at? Yes. Many of you. I do too, sometimes. So let's make it a little simpler, shall we? Let's use some tools that are available here on the Thinkorswim desktop software platform that will help us to make an objective decision about trend and direction. Would that be beneficial? To be able to make easier decisions about getting into the trade or which bus to get on, yes? So Ray, what if we put a couple of studies on here? We're going to go to that little flask icon up there at the top of the page. We're going to drop down that flask icon. On the web-based platform and on the mobile platform, this is going to be a little bit different, but you can do the same thing. You can put moving averages on those charts as well. We're going to put a couple of different moving averages on here.
I'm going to delete it so we can start.
Yeah, go ahead and delete it. Let's start from new, because those were different colors anyway. All right, so we're going to use the technical analysis tool called a moving average. And before I get that, yeah, but what about this type of moving average, or what about that type of moving average? We're going to be using simple moving averages. Not because they're simple, not because they're better, not because they're worse. They're just a simple moving average, a mathematical calculation. Closing prices over a period of days, divided by the number of days that we're looking at, and that gives us our moving average. Okay? So, we said that our time frame for a long-term trend was months to years, yes? So over the course of a year, there's about 220 or so, 222, depending on the year, trading days. So we're going to use a moving average of 200. In this case, because we're looking at days, it's going to be 200 days. We could also say 200 period moving average if we were looking at weeks or we were looking at hours or minutes. We're going to use a 200-day moving average as a definition for a long-term trend. So Ray, let's put a 200 period or 200-day moving average on here.
So what I did is I went to that flask, opened it up, and I started typing the word simple. And you see any word, any studies that have this simple name in it, it pops up. Here's simple moving average. I double-clicked it, and I'll make the loads into the price area. I'm going to go to the gear on the simple moving average, click on the gear, and that's where I'm going to length. I'm going to type in, instead of 9 default, I'm going to put 200. Okay?
Let's change the color on that too.
What is it?
All right, so we'll make a solid line. We'll make it a little fatter so you can see it. And then,
make a nice, comfortable green color.
Comfortable green, there it is. Comfortable green. And okay. Don't forget to hit the word okay. And then hit apply. And then okay again, and there you have it.
What's the long-term trend of Tesla? Up to maybe kind of sideways. But we can objectively now look at the trend direction, that long-term trend direction, by looking at what direction that moving average is pointing. Tesla is in a gradual uptrend over a long-term time frame. Does that help? Does that make it a little easier? Cool. All right.
And now it's trading well above the 200-day moving average.
And it's well above the 200-period moving average. Now let's take that intermediate time frame. Let's take that, what did we say the definition of an intermediate time frame was? Weeks to months. Okay, so now we're kind of going into that middle section.
Same process, we're adding a second line now of the moving average. And then we're going to wipe out that 9 and 50 periods.
50 days, that's a little bit less than a quarter's worth of trading days, a little bit more than a month and a half's worth of trading days, so 50 trading days, in this case for 50 periods. Let's make it that blue color, right? Let's keep it that blue color. Kind of a happy blue.
Simple.
It's your chart. You can paint the colors the way you want. Put a happy little moving average on there.
You can call across. A little tree on there.
What's the intermediate term trend direction in Tesla right now? That blue line, that 50-period moving average, is moving higher. It's in an intermediate term uptrend. Does having that moving average on there help you to define what that trend looks like? Help you to make that decision? Sure. Okay, now let's take it to the next step. What did we say the short-term time frame definition was? Days to weeks. Days to weeks. So days to weeks, we might think about, I don't know, 2 trading weeks, 5 days in each week. That's days to weeks. That might be 10 trading days or 10 periods to a 10-period moving average. Now this one's a little more urgent because this is a shorter term time frame. So what if we made this red, right? Red or orange, that's fine.
What is it? Show me.
That looks like paint to me.
Show me how to do it.
Okay, that's fine. Orange is fine. It's a little more urgent. You're going to click on apply, and okay, you can make the colors whatever you want them to be. Wow. Zoom in on that right-hand side because it's kind of getting lost in price action. What's the short-term time frame trend direction? Sideways. Cool. So if we were looking at getting into a longer-term trade on this stock, we've got a long-term uptrend, don't we? The bus is going north. It's just not going north really fast. We've got an intermediate-term time frame that's going higher. On the intermediate basis, that bus is still going north. In the short-term time frame, this bus is going sideways through a parking lot. We're waiting for it to start to head north again. So what could we say? If price breaks that 10-period moving average, then get on the bus. Or when that 10-period moving average starts moving higher, starts pointing up, then enter the trade. Then get on the bus when the short-term trend starts to move higher. So using just that simple tool, simple moving average, 3 different times, we've now given ourselves a technical analysis perspective that allows direction over different time frames. Already, does that make your entry decisions easier? If price is, you can frame that question a lot of different ways. If price is above the 10-period moving average, then it is bullish. That might be one way that you could express that. Or if the 50-period moving average is above the 200-period moving average, then it's in an intermediate bullish phase. Whatever you want to use, this is the extension of this idea of being able to identify trend direction. Is that helpful? Let's take another stock here, Ray. Let's take something like good question. So the question is, where would the entry point be? I don't know. We might draw a line of support or resistance that can help us to make that decision. But if we were to do that, we might say, if price breaks 460, then enter the trade. We build that hypothetical, that kind of if this then that statement. We're not trying to predict the future because do I know what Tesla's going to do tomorrow? I don't. Certainly don't. Because it's a relatively volatile stock. But we've aligned our trend directions here in helping us to make that decision. Let's take something else that's been moving a little bit. Let's take, I know Netflix has moved recently based on earnings and upgrades. I talked a little bit about it on the network the other day. NFLX. Well, there it is. Okay. This one's maybe a little bit easier to see. What's the long-term trend direction of Netflix? The green Long-term moving average, that 200-period moving average moving side or moving up. What's the intermediate term trend direction? Kind of sideways, maybe starting to turn up a little bit. And what's the short-term trend direction? Up as well. Now we can make a decision. Now, we're going to get into this next section here. I'm going to bring Scott up in just a moment. We're going to talk about support and resistance. But once again, this might be that if this, then that statement. If price moves above that moving average or moves above the resistance level, then enter the trade. I want to do one more. Let's go back to our downtrend. We use STZ, right? This is Constellation Bridge. What's the long-term trend of Constellation? Down. What's the intermediate trend direction of Constellation? Down. What's the short-term trend direction? Up. So if we're taking a short-term trade, we might trade that and enter on that short-term trend direction moving higher. But if we're intermediate or longer-term trend traders, we might be waiting for a turn or even a crossover of those moving averages. We might say something like, if the 10-period moving average crosses from below to above the 50-period moving average, then enter the trade, else wait. See how we can frame our decisions that way? Is that helpful? Ray, what do you think?
I think that's pretty good.
These tools can be used, and it doesn't have to be, because here's the what if. But what about an exponential moving average? What about a displaced triangular whole moving average? What about whatever kind of moving average you want to put on there? Isn't that best? Isn't that better? And what about 821, 220 moving average setup? Somebody told me, or probably more frequently now, I saw a YouTube video where some kid said the only moving average to use is a 9-period moving average because that's the way he made millions and he bought himself a Lamborghini. We've all seen those videos, yes? Yeah. Use what makes sense for you. I presented these, Ray and I talked about these different time frames in the context of these different time frames that we look at in terms of trend. Short-term, intermediate term, long-term. If you find a different time frame that works for you, great. There is no one best. There is no best. We'll talk more about that when we get into other technical indicators. But guys, do me a favor and give Ray Kimbrell, who is the best. Yeah, give Ray a applause. Thank you, my friend. Look at that. Yeah. Get on the bus, or you're getting off the bus, right? All right. Now what we're going to talk about is the idea of how we can continue to frame these decisions, these points at which we can look at entering and exiting a trade, number one. And number two, some of the things that help to frame those highs and lows. What creates those highs and lows on the chart that then make up a trend? So to help me do that, do me a favor and give me a big round of applause for also the best, my good friend Scott Durfee, coming up to the stage. He's been doing this since 2006. He is a frequent contributor on the Schwab Network as well as my show, Your First Grade, and he teaches this as well as other workshops and is a great instructor as well. Hi, Scott. How are you?
Good.